If you spend any time online looking for financial advice, you're hit with a wall of noise. One guru says you need to start dropshipping, another says buy crypto, and a third tells you to hustle local service businesses. They're all pulling you in opposite directions. Most people worry about failing to find a good idea, but there's a much worse trap: successfully building a business that doesn't fit your life. Wealth building isn't about picking the objectively best idea out of a hat. It's about matching a wealth vehicle to your current life stage, your available cash, and your tolerance for risk. Choose the wrong model and you'll either lose your capital on something you don't understand, or you'll build a self-made prison that you deeply resent operating every single day. This matrix evaluates these models. The horizontal axis measures operational involvement, how active or passive you must be. The vertical axis measures growth ambition. This intersection reveals 4 wealth creation paths: the binary hustle, the systematized machine, the lifestyle craft, and the macro asset. We're going to evaluate the exact inputs, outcomes, and hidden trade-offs of each quadrant to help you identify your ideal match. Categorizing these models allows you to filter out advice that doesn't align with your goals, saving you from chasing strategies that were never meant for your situation. Let's start with high-active, low-scale execution, the binary hustle. This is a business built entirely on simple, local cash flow with low barriers to entry. Think of flipping liquidated goods from big-box retailers, trimming trees, or serving massive local logistics hubs. The tasks are straightforward, and the demand is already there. There is a mandatory rule for this path. You must validate your customer acquisition before you buy a single piece of inventory or heavy equipment. You find the buyer first. Do that correctly, and you can generate immediate, high-margin cash flow with almost zero starting capital. The catch is that this model is never passive. The exact moment you stop manually hustling and fulfilling orders, the cash flow drops to zero. If you want to remain highly active but want to scale aggressively, you enter this systematized machine quadrant. This is built for founders who are trapped working 80-hour weeks and need a way out of their own bottleneck. This is a diagram showing a complex business flowchart. To execute this model, you have to pause daily operations and visually map out every growth engine and fulfillment pipeline. Mapping reveals your exact operational constraints. Your role completely shifts from generating new ideas to solving specific roadblocks inside that pipeline. To fix those roadblocks, you have to spend significant upfront capital to hire autonomous functional leaders like a head of sales or operations. You cannot rely on cheap assistants needing constant direction. Once the leaders are in place, you buy back your time entirely. You can take long, unplugged vacations, and your business turns into a sellable asset. But to get there, you have to surrender the ego boost of being the hero. The more vital you are to the daily work, the less valuable the company is. Not everyone wants a corporate scaling machine. The lifestyle craft model prioritizes artisanal quality, passion, and intentional operational limits. The mindset for this path is often forged in individuals who have relocated from difficult environments. They bring an incredibly high drive to succeed on their own terms. They transition into a new culture and learn to grind through the early, friction-heavy challenges of navigating an unfamiliar system. Following their deep personal passions, these founders frequently move to industry centers where they can be surrounded by the best. They combine that raw drive with formal education and hands-on training in a specific craft. The result is a business that can match a professional salary while allowing the founder to remain hands-on with the craft they enjoy. But maintaining that level of quality is inherently unscalable. You have to actively reject mass-market growth to preserve your lifestyle. Finally, we have the purely passive, capital-intensive model of macro asset cycles, which completely removes you from daily business operations. This chart maps a volatile asset price against a long-term moving average. Your only input is allocating large capital based on these technical indicators. As the timeline zooms out over multiple cycles, you hit diminishing returns. Each successive peak yields smaller percentage gains. Successful timing allows for wealth accumulation that is decoupled from your hourly input. The brutal trade-off is zero operational control. You have to passively endure severe financial drawdowns without the ability to work harder to fix your portfolio. Let's filter your options. Have 20 hours a week? No means macro assets, if you can stomach volatility. Yes? Then will you manage teams? Hiring builds a systematized machine. Staying solo for cash means a binary hustle. Staying solo for fulfillment means a lifestyle craft. Attempting to force a path that contradicts your personal flowchart leads directly to operational burnout or a total loss of your capital. It's your responsibility to consciously choose your own constraints. There is no universal best model for wealth, only the model that uniquely matches your resources, your skills, and your stage of life. Financial freedom comes from aligning the scale and nature of your work with the specific life you want to lead.